September 2021, question number 5B. So it says, the following information was obtained from the financial records of Alemao Commercial Bank Limited for the year ended that 1st December 2020. So I've been given that. Additional contribution to deposit protection fund includes investment valuation surplus of 927, including transfer to statutory reserve is an amount paid for exchange commission of 72,000. Discount on bills purchased include interest and discount paid of 58,500. Provision for bad and doubtful debt includes specific bad debts at the beginning and at the end, amounting to 102 and 210. Corporate tax applies applicable during the year was 25%. So you are required statement showing the taxable profit or loss for Alemao Commercial Bank for the year ended that 1st December and tax payable or refundable. This is Alemao Commercial Bank. Alemao Commercial Bank statement of taxable profit. The year ended at 1st December. At 1st December 2020. Let's start with the taxable incomes. Our incomes, which are taxable. The first one, you have what? Interest on advances. Yeah, interest on advances. Yeah, we had a value of 697, 200. 697, 200. Then, what else? We have interest on government securities. Interest on government securities. Interest on government securities of what? 21,900. Then we have interest, okay, paid interest on placement and bank balance. Yeah, interest on placement and bank balance. Bank balance. We had a value of what? 39.90. This September 2021. 5B. Okay. Then what else? We have gain on foreign exchange. Gain on foreign exchange. Foreign exchange dealing. Gain on foreign exchange dealing. We had a value of what? 2205. And again, we have the discount on bills purchased. Discount on bills purchased. That's an income. Discount on bills purchased of 493. I think there was a note. Was there a note? Discount on bills purchased include interest on discount paid of 58,500. So we shall minus. So shall take what? 493 minus 58.5. You get what? For that 5. Then we have what else there? Investment, bills receivable and for collection, guarantee, interest accrued, bills for collection. We have the rebates. Rebates are the refunds. Rebates. The rebates on bills discounted. Bills discounted. So we have rebates of 430, 438. Then we have general charges recovered. General charges recovered of 370, 375. Then we have the commission on exchange and brokerage. Commission on exchange and brokerage. Commission on exchange and brokerage of 1176. That way. Do you have any other? I think that's all that we have total. Hoping we have covered everything. So if we have others, we shall just adjust. Give you a value of 7. 719. Huh? So less allowable deduction, allowable deductions. These are expenses which the banks are allowed to deduct. In the first one, we shall have what? Contribution to deposit protection. Huh? Yeah, contribution to deposit protection fund. We had what? 147, but not one. You're saying what? Contribution to deposit protection fund include investment valuation surplus of 972. That one is not allowed. Any surplus of the revaluation on you minus 146, 146,028. Then, uh, then the other one is operating lease. And operating lease, an operating lease of 9720. Then we have interest paid on deposits. Interest paid on deposits. Interest paid on deposits of this 7110. Yeah, 7110. Then, so loss on disposal of collateral, that one is not allowed because we are not in the business of disposing collateral. We have fees and commission expense. Fees and commission. Fees and commission expense of 2130. Hoping there was no any additional on that. Then let me first deal with the additional. Number 2, including transfer to statutory reserve is an amount paid for exchange and commission of 72. Exchange and commission. Exchange and commission paid. And commission paid of 72. Then number 3, we have dealt discount on bills, the one that was paid. Yeah, discount on bills paid. We paid 70, 58.5. Provision for bad and doubtful debt includes specific bad debts at the beginning and at the end of the year amounting to 102 and 210. So increase in specific provision for doubtful debt. It increased by what? 210 minus 102. You get an increase of 108. So the increase in specific provision, and I think we are done with that. We go back. So loss from investment in security. Remember, the gain is taxable. Yeah, so the losses are allowable in this case. Loss from investment in security, 1185. The gains are taxable because the gains are interest. Purchase of equipment, less wear and tear. Wear and tear on equipment. Wear and tear on equipment, 1800 by 25%. Even though we don't know the type of the equipment, just less at 25% or 50. Others may use 10% depending on the assumption. So the assumption there is an office equipment. Depreciation is not allowed. Transfer to statutory, already have dealt with that. Losses on stock brokerage dealing. So the gains are taxed, and the losses on stock brokerage dealings of 522. So again, we have dealt with it. Discount, we have dealt with it. Auditors remuneration. Debtors remuneration 1179. For the debtors remuneration, provision we have dealt with it. Investment is an asset. Bills, that's an asset. Guarantee we don't include. Interest accrued and paid we don't. We only deal with the interest for the year. Accrual we don't. Bills for collection, again that one we don't deal with it. Rebates we have used it. Provision for tax we don't deal with the provisions. General we have used, and commissioner. So we are done. Total. Get our taxable income. One- 168. So new minus 5. Okay. Our tax paid, number 2, the tax paid, so 559, 561.5, 30%. They have said what? The tax applicable is 25%. So it was during Corona, so the rate had been subsidized. So 25% of the rate. 139, 139.375 shillings in thousand. Or if you have to put all the values, it will be 139,890, 375. That's how you deal with the taxation of banks. So go to the next, May 2021, question number 1C. May 2021, 1C. So in these, the 2 consecutive sitting, May and September, they tested the bank. So we do that. So the following details was obtained from the records of Mandelier Bank Limited for the year ended that 1st December 2020. So the net loss for the year was 22 and 60,000 after the following had been recorded. Then the staff cost include the online banking system was installed in May, and it included the cost of computer software and new computers at a cost of 620. Required statement of adjusted taxable income or loss for Mandelier Bank for the year ended that 1st December 2020. So here we are using what? The net profit approach. Yeah, so reported net loss. This one is for Mandelier Bank. Mandelier Bank Limited statement. Statement of adjusted taxable profit or loss for the year ended that 1st December 2020. So reported profit, reported net loss. So here the reported net loss of, do you use shillings in thousand or we use the whole values? The whole 22 and 60, and we add, we shall add non-allowable expenses, non-allowable expenses, and under non-allowable expenses, the first one, let's start with the note number 3. The online banking system was installed on 1st May, and it included what? The cost of computer software. So that is capital. Computer software. This is capital of what? 200,000 and new computer. New computer of 620. 620,000. That way. We shall calculate later on the way and here. Number 2, the staff cost include provision for salary. Do you allow any provision apart from specific? Provision for salary. Salary increase of 220,000. Cost of negotiating loan for staff. Do you allow that? For staff? No. They negotiate for themselves. Yeah, negotiating loan. Negotiating loan for staff. Negotiating loan for staff, 140. And senior staff, club membership. Do you allow that? Club membership, even that, it is discriminatory. Yeah, only for the senior club. If it's for all, then senior club membership is not. Number 1, I think we can start from bottom going up. So rebate, you have said that is taxable. Profit and loss, that one is part of the incomes. Purchase of double cabin pickups, that is capital. Pickup. Yeah, we have a pickup of 2.4. That is capital in nature. 12% debenture we don't allow. It's not an expense. 12% debenture stock. We shall allow what? The interest on debenture. Only the interest on debenture. Capital redemption reserve. We don't allow reserves. Capital redemption. Redemption reserve. Capital redemption reserve of 920,000. Operating lease you have said is allowed. Staff we have covered. Installation we have covered. Installment tax. Any type of tax. Installment tax. Any type of tax is not allowed. So installment tax of 724,800. 724,800. Then loss on disposal. I have said we are not in the business. Loss on disposal. Disposal of collateral. We are not in the business of selling collaterals. Whether we sell at a gain, it's not taxable. The loss will not be allowed. Audit fee is allowed. Provision for interest, we don't allow. Provision for interest expense. Interest expense, apart from specific provision. So this one is 180 what? 184? 400. Then the other one, depreciation. Depreciation. So here the depreciation of 445, 300. 45, 300. Then income, you have said that is taxable. Directors emolument, rent, interest, contribution, interest on loan, think all that. Fees, gain on sale. So the gain of sale of shares, we shall less that. Income from trading activity of a foreign bank subsidiary, then that one is taxable. Okay, I think we are done. Total. Four 500. That way. Okay, so that is 8 million, and that was 22. So when you add, shall have 14 what or 13 what? I think 195, 185, 500, 185, 500. We less non-taxable. Non-taxable incomes. Here is only the gain. Gain on sale of shares. There it qualifies for capital gain tax, which is final. So 294,000. The income from trading activity, that is taxable. The NIVA. So remember, for the foreign is normally the investment income. Yeah, income that is investment from abroad. This one is from operations. So less allowable allowable expense omitted. We have the investment allowance. Investment allowance. Starting with what? The first one was computer software. Software. We had a software of what? 200. Yeah, 25%. And a computer itself of 620. 25% will be 50. What about this? 25%? 155. Then we had the pickup. The pickup was 2.4. 25%. 5% of that, 600. 600, and you have the interest on the debentures. Interest on the debentures. Our debenture was 1.2, 12%. Be 14, 144. I think that's all that we had as our allowable expenses that was omitted. Omitted meaning they were not calculated or they were not considered. So when you add them, and you get your adjusted taxable income. Adjusted taxable income. 949. And you minus. So it will give you a value of yes, 14,428, 500. 14,428, 500 negative.